Okay, I think we are live. Hello, everyone. My name is Henry. I'm the moderator of today's panel, which is called What is the Winning Strategy for a Local CSD? First of all, thanks for the organizers to invite us to the panel. We have a very great panel as it is. We have an experienced Secretary General, Anna, from EXDA, with a very deep knowledge of the industry and the regulatory agenda. We have two CSDs, Mohammed from Maroclear, and yes, very seasoned CEO Khaldoon from Kuwait. KCC and the Kuwaiti market was actually the second busiest market in GCC in 2020 after Saudi. We have a custody industry legend and again seasoned practitioner, Scott from Standard Chartered. And finally, we have the world's leading technology solution provider, NASDAQ representative, product manager, Andreas. And actually, he also has a CSD background from Euroclear. So the panel is really awesome. Welcome, everyone. Welcome the audience. Welcome the panelists. So how I wanted to organize this is that in the beginning, I will give each few minutes time to introduce themselves, what they are currently doing, what's the main agenda point initiatives. And then we go to the topics of the day. I'm being a polite person. Let's start with the ladies. So Anna, I'll give it to you.
Thank you very much, Henry, for this presentation and for moderating this panel. Very honored. Perhaps I shall first be given a couple of words indeed with regard to EXDA. So EXDA is the Association of Central Securities Depositories from the geographical Europe. We have today 40 members and the industry holds more than 62 trillion euro worth of securities and settling yearly securities transactions representing 1.5 quadrillion of euro. So these are big amounts, and in our case, indeed, the CSDs are very advanced and having a lot of interesting thoughts and technology advancements. So I will be very pleased indeed sharing the knowledge from our European industry with the regional CSDs from your region, indeed, during this panel today. On my personal agenda, I would perhaps highlight three following topics, which are really taking most of my time. I would start with the risk management and compliance. I think that these are the areas that are must for any CSD at any point in time. And they are certainly should be on the agendas indeed of those who are willing to excel in management of the strategy, but also in management of day-to-day operations of the CSD. The second point that I would highlight is related to all types of harmonization, automation, and making sure that we have the STP within the operations of the CSD. And the third one is certainly the technology and everything related to the future thoughts of advancement of the industry as a whole. And the biggest part of it, in my opinion, is certainly the future of CSDs as well. That would be all for me.
Thank you, Anna. Let's move to Khaldoon, please. Please unmute. Khaldoon.
Well, good afternoon to everyone, and to the audience and to my fellow panelists. I'm pleased to be invited to this session. I think the panelists here are all rich in knowledge and history, and every one of them will budge into the session. I'll just go into introducing KCC, quite clearing company, as Henry has said, has gone through an extensive changes over the past few years. Quite Clearing Company is the oldest clearing and depository entity in the region. It's been established back in the 80s. I am the Chief Executive Officer of this prestigious institution, and I've overseen over the past few years the strategy and transformation plan, which was established back in 2015 with the goal and the aim to basically align the company's operations and processes to align with best practices and international standards in order for the company to support the initiatives of the Capital Markets Authority and Borsa Kuwait to upgrade the markets on different indices, which we've gratefully succeeded over the last 3 years by being upgraded to emerging market status on 3 international indices. The strategy was established in 2016, and what happened in Kuwait, in the capital market of Kuwait over the last 2 years was due to the investments we've made extensively into our infrastructure and the entire operations of the company.
Thank you, Khaldun. Let's move then to Scott, please.
Thank you, Henry, and good afternoon. I'm Scott Dickinson from Standard Chartered Bank, and I'm responsible for custody activity in Africa and the Middle East. Standard Chartered is really known as an emerging and frontier market specialist in the custody space, where we operate over 40 markets in Africa, Middle East, and Asia, and again supporting a wide range of local and regional investors. So we see we have seen really significant changes, particularly in the Middle East in recent times, as the indexes both in equity and fixed income have begun to have a meaningful impact on the flows that we see coming through the region. And I think one of the things that's very interesting is that history tells us that if you have a fundamentally strong investment message, a strong investment return, investors of all types will find a way to get into your markets, no matter how complex they are. But it also tells us if you want to have a sustainable market for long-term investors, for intermediaries, as well as those who are making short-term speculations, you need to have a very strong underlying infrastructure that underpins that activity to create sustainability for the long term, which I think as markets mature, everyone seeks. And we see very much that the role of the CSD is one of partnership with custodian banks, which I know is one of the topics that we're going to be discussing, because increasingly, as investment opportunities in low yielding times sort of mature, we're looking for the ability to look at markets in a much more transparent way so that we have wider participation at the end of the day. So how the CSDs coordinate around that activity, I think, is a really critical part to the long-term sustainability within this particular region.
Thank you, Scott. And as you said, this is one of the key topics to discuss. What is the partnership model between the market participants to allow more smoother access to the market and improve the services custodians and CSDs can provide to the investor community? Now I will let Mohammed to get him started well and give the floor to Andreas, please.
Thank you, Henry, and good afternoon, everyone. Pleasure to be on this panel, this distinguished panel. My name is Andreas, and as you can see in my background as well, I represent Nasdaq, and I represent the market technology part of Nasdaq. So market technology is providing technology solutions to marketplaces, 130 marketplaces in 80 different countries over the world. And as Henry mentioned, I'm the product manager for our CSD offerings, which includes our first generation, the Equator, which is quite heavily used in the region, and also our second generation CSD solution that is currently implemented in various places around the world. So hopefully what I could bring to this panel is some experiences, what we have seen when we are talking to clients worldwide, and what they are struggling with and how they are sort of coping with the challenges going forward. But as Henry also mentioned, before I joined Nasdaq, I worked 17, 18 years, I think, at Euroclear Sweden, a small local CSD, although part of the Euroclear group from 2008. Struggling with many of those questions that we are and topics that we are to discuss today as well. So hopefully I can bring some of my experience from those years as well to the table.
Thank you, Andreas. I think it looks as if we've lost Mohammed. So let's move on then. So just want to repeat the topic of today, because that ties in all the discussions we will have following these introductions. What is the winning strategy for a local CSD? Now, one of the topics is that, is there competition and what kind of partnerships the environment can allow us to create? Now, as a matter of fact, to respond to the first question, there is practically no competition between the CSDs, even when in some markets there are multiple CSDs offering services in that country. So the competition might be between custodians and the CSDs. But I think more importantly, what exactly Scott told earlier, we should look forward to the partnership, to the collaboration, to create something unique to the investor community, to sort of create additional layers of services. And that's partly also tying into the operational model, which is the next topic of today. So let's start with the discussion on competition versus partnership. And I would like to sort of invite to the floor Scott, hopefully with some controversial views on competition and where that might be, and what benefit would that create to the community?
Thank you, Henry. I think it's a really interesting question. I mean, if we look at it on a regional basis, we don't really see CSDs market by market as competitors. We very much view them as partners. In a way, neither can do the job that the other does. You know, we are in the custodial world, we're client facing, we're solving different sorts of problems, and you have the CSD, which is market facing and bringing a discipline to the process there. So I don't see that is a direct competition. There are clearly things that we do in common, and I think there's a lot to be gained from collaboration around those, and we'll no doubt touch on those a little bit later. I think the picture changes a little bit, Henry, when you take into account ICSDs, where you are having a different dynamic to a certain extent, where you are collating a lot of information across exchanges, and we do see more theoretical competition in that construct. But I've been having those discussions for over 30 years now, and actually we seem to coexist very, very well. At the end of the day, the underlying clients really determine what is the most efficient way to the market. And I think it is for all organizations to try and bring that efficiency, and the market to a certain extent will decide. But it does, Henry, also depend on the fact of what are the sorts of clients that you're servicing, because quite clearly, if you have a customer that has a mono product or a mono investment strategy, for example, the Eurobond market, pure and simple, then it's a potentially different outlook from someone who is investing in multiple asset classes, in multiple markets, in different scales and time zones. So The answer is, I think, for our purposes, when we look at the Middle East, we do not see this as competitive behavior, and we would like to see more and more collaboration, both between us and actually between the CSDs themselves, to the level that that's practically achievable.
Thank you, Scott. And I said we should also couple this with the operating model and the services we provide, but it was, I'm happy that you stopped there. Let's give the floor to Anna to take this sort of wider industry view on competition and partnerships. By the way, talking about partnerships, just to fill in what Scott said, and I'm sure Anna will repeat, there are many areas where the partnership can entail, and one of that area is cybersecurity, for example, to allow information flow between the CSDs, between custodians and CSDs. And there are other things, and I'm sure Anna will touch, which are regulatory and market practice related collaboration. So please, Anna.
Thank you very much, Henry. So indeed, I would rather see many partnerships, but with a variety of different actors. So not necessarily just with the custodians, also these partnerships are certainly very important as well. But I would see it in particularly with technology companies, indeed, in the future, where we see that we will be largely collaborating with regard to the cloud technology, with regard to the cyber, as you have mentioned, with regard to DLT. We are seeing many of the very interesting fintech companies, which we certainly shall be very attentive to. And I'm sure that these types of partnership will be beneficial, and for them, in order to gain the knowledge of financial markets, in order to indeed very much understand that trust perhaps in our area is really a must to have, and therefore it can only be injected by the institutions that are very strong in terms of governance, that are very strong in terms of risk management, operational risk in particular in our space. I would see it really as a beautiful collaboration between the two in the future. And this is certainly something that shall be feeling indeed many of the pains of the clients, of the CSD participants and their underlying clients in terms of the future expectations, right? In terms of providing of the services as well. So I would certainly be very attentive to this. Otherwise, I would also see many partnerships, including with the custodian banks, with regard to the expected needs in terms of the provision of a broader range of different services and of a broader range of links, access to different types of assets and access to different types of currencies as well. And here I also believe that there can be something very nice and beautiful emerging out of it, because there is indeed a need from the side of the clients to have the DVP, so delivery versus payment solution, in a bigger and a more diversified number of securities and currencies as well. So I would certainly invite any CSD, local indeed, or a bit less local, so more regional or international, to be turning this way as well.
Thanks, Anna. How do any comments from the regional CSD, local CSD in Kuwait on what Scott and Anna was talking about?
I think the part that Anna raised, and I've had that discussion with her, earlier. I think investing in technology early on is part of a winning strategy. Since the subject of the session is what's a winning strategy for a CSD.
I think there might be a bad connection. Haldun, I'll give you the floor a bit later. There seems to be a bad connection, but you will have enough time to comment that later.
Yes.
If I may, I think
over the last half years is that we went in early. And hello, can you hear? Hello. Okay.
Not
Hello?
really. The connection is actually quite
Hello?
bad.
Yeah.
Let's give Andreas a floor to comment, and then you can come back later, Khaldun. Thank
Okay.
you.
All right.
Yeah, just to chip in some of our experience, and I think it's a very interesting topic, this the collaboration between CSDs and custodians. And in my previous life, I had a lot of struggles with the local banks in Sweden when we wanted to introduce new services. But but when we look at the different implementations we have done, and my experience comes primarily then from when there is a CSD system replacement project in place, and we see various very different kind of behavior from the CSDs in terms of how much they involve the participant level, the custodians, in the process of defining the new business model, because that's what we are encouraging all the CSDs when we are talking about the system replacement, is just don't look at this as a tech upgrade. See this as an opportunity also to improve your business processes, adopt to international best practices, involve the custodians, the participants, and see how to improve the efficiency of the market. But there are various different approaches to this, and we have seen examples where the CSD just want to replace the system without even talking almost to the participants, and keeping it like a sort of black box, and everything externally should be as it is. But I think it's important to, if you're considering it as sort of a replacement project, or even if you don't, engage in those kind of discussions with the participants to make sure that you can find an efficient model going forward. I think that's crucial for survival, actually, or how to improve going forward.
Thank you. Let's move to the operating model discussion. So partly, obviously, we have been talking about the regulatory impact to it already. Technology was brought up here. Khaldun, especially representing the CSD here, how you see the sort of the market practice regulatory issue hindering developing operating model that would allow, for example, international investors smooth access to the market. For example, in most of the GCCs, there are no nominee and omnibus regime, at least not in a sense that it is seen globally. So how does that impact to KCC, that this is not possible?
I believe that regulatory frameworks adapt and change to the landscape. As we've seen with Kuwait in recent years, the regulatory framework has adapted. Let's just keep in mind that the regulatory body in Kuwait is fairly new, and it's been only 10 years. And there are massive changes that have been done to the regulatory framework to allow CSDs to develop the market according to international requirements. And the Kuwaiti market has done a tremendous job over the past few years, listening to international investors and adapting to what international investors want. So the setups that you've mentioned will eventually come up to the market at some point. The regulatory framework does hinder when it's not changed, but we in Kuwait see that the regulatory framework is adaptive and flexible, and it's being changed as we speak. And what we've seen over the past 2 or 3 years, massive collaboration between the regulatory bodies in Kuwait and the private sector and the CSDs and Borsa Kuwait. And the result was what we've achieved as a market upgrade. So I don't seem to think that it hinders. It does hinder some processes from being developed, and particularly when it comes to adapting to new technologies such as distributed ledger technology, DLT. But we are in very close collaboration, and I think the GCC market will come to a point where it's going to adapt to these changes and introduce these setups.
Thank you, Khaldun. Now we have Mohammed from Morocco joining us. Would you like to give some opening remarks from your side on the initiatives ongoing and where Morocco is heading to, please? Mohammed? Okay. I must now give the floor to Scott, because I'm sure one of the areas of interest talking about nominee and omnibus accounts and how interaction between the CSD and custodians all the way, obviously, to the investors could be improved. So please, Scott.
Yeah, I'm probably a bit of an outlier when it comes to omnibus and segregated accounts, because one of the reasons that there was a real challenge historically going back many years is that the computing power and the record keeping capabilities of systems were rather limited, and having segregated accounts by individual participant was a major hurdle. And omnibus structures as a result became very fashionable. They were essentially more cost effective and operationally more efficient in many ways. I think we've moved on from that, actually. And the technology allows record keeping to a much higher degree of sensitivity than was possible in the past. But omnibus structures clearly are another option. I think what it is about is creating, well, level playing fields in one sense, to allow people to be able to participate in the market rather than just have the rigid structure that works. So for me, if an organization wants to go the omnibus route, then that should be supported. What I actually see from a practical point of view, particularly if you're looking in the sovereign space or those sorts of institutions, they actually are much more in favor of a segregated approach. So they rather like, if you like, that structure. So you have differing views there. I think one of the things, there's one thing that for the CSD really does lie at the heart of it, I think is really fundamental. We need, as a marketplace, we need to have the confidence, and investors need to have the confidence, that there is a central authority that is capable of keeping accurate and timely records, and there's definite identity of title. It sounds a little bit obscure in some respects, but it's absolutely fundamental to any investor to ensure that takes place. And I think that role is best performed centrally. There's no doubt. One of the things that we experience on a practical level, Henry and other panelists, is that all of the technology that is being, the technological solutions that are being put forward are generally big ticks in the box. They're really positive. But we talk about the last mile in our business, and this is where typically you have different operating models operating different ways, particularly when it comes to the processing, for example, of legal documentation. So we have all of this automated process, which then gets held back at the last mile by manual overrides, the insistence on wet signatures, on corporate documents, etc. And what we've experienced in this pandemic is actually the CSDs have been enormously supportive of accommodating us during a tense time such as that. But equally, I get the sense that there is a desire that once this has passed, that we're going to go back in time, rather than taking that as an advantage to leapfrog and make this thing an easier process. Because it is still fair to say, in this region, and it's not exclusive to the Middle East by any means, onboarding new investors into the region is a very timely process. And anything that we can do to simplify that without introducing risk, it has to be said, to Anna's point, has to be seen as a good thing. And to wrap that up, really, the only way that we're going to make that happen is collaboration. Just purely independent initiatives will not be sufficient in themselves. They may solve the issue for one particular market, but I think that we are all recognizing that there is much more interlinkage between us, that just solving it for one market, frankly, just isn't good enough.
Yeah, thank you. I'm sure Haldun would like to comment on this, but I will not give the floor to you now yet, because I will tie in this into another topic of today. Instead, I would like to hear Andreas' viewpoint. Let's include to the discussion the next topic, the added value services. I mean, CSDs have always been that part of the value chain that is profitable. Whatever happens to the market, CSDs survive due to the fee schedules or the size of the assets or the value of the assets, or that they are actually developing new value-added services. Now, if we talk about topics that was just discussed by Scott, we tie in that to the added value services. We also talk about digitalization of services, the customer journey, how they interact with the market, and then talk about maybe also new technologies that are out there, like blockchain, RPA, AI, ML, etc. Does technology meet the new needs of market to evolve and develop, and also support the interaction on the sort of messaging layer, what Scott was talking about?
Thank you, Henry. Yeah, I think this is a huge topic in itself, right? So first and foremost, going back to Scott's discussion about the beneficial owner account structure versus omnibus account structure, I think, as you said now, technology, even traditional technology, if we may call it, that what we are currently delivering is very well suited for millions of beneficial owner accounts. And I think from a business point of view, I think it's a question of not either or. I think it's a combination. I think you should allow for a hybrid model where you have both benefits, because for retail investor, there are, I can see from my history as well, there are benefits of having retail investors directly in the CSD, but you can also collaborate with the participant level, the custodians, to make sure that their service offering to those retail investors are still considered as a service offering from the custodian, even though the accounts are actually kept in the CSD. Then for institutional investors, of course, maybe a segregated omnibus model is the preferable one. And then also, but that's more maybe in Europe, and that's for maybe Anna to comment on, but we also have the shareholder rights directive and the sort of the rights to identify the shareholders in a smooth and efficient way. Technology is, and yeah, one sort of starting point for CSDs is, of course, the cost structure of a CSD. If you start there, right? So I've heard numbers that the amount of fixed cost for a CSD is about 80-85% of the total expenses of a CSD. So of course, scaling is crucial in any way, and that's why they're also looking into introducing new kind of services, addressing new asset classes, asset types, for example. So I think in an ideal world for a CSD would be to have like a hybrid account model with beneficial owner accounts for the retail segment. Ideally, you would have a commercial contractual relationship with the issuers. I think the issuer side is an interesting aspect for many CSDs, and that's where we also see some involvement in terms of providing voting services, for example, to the market as part, which lies very close to the CSD's core business, but still is a bit of a new kind of service that they provide. At the same time as you have this fixed cost level on the CSD and you're looking for scaling, you also have the constant pressure from the participants, of course, to lower the prices, to continue provide cost-efficient services, etc., etc. And I think there we will see, we don't see it currently, but we will see going forward. I think we will see robotics, AI, and that kind of stuff coming into play in order to enable more cost-efficient processes. The challenges, I would say, then, is the investment of that technology for small local CSDs, and coming back again to collaboration, I think, and also maybe we will talk about consolidation also later on, that could drive also that kind of initiatives.
Thanks, Andreas. Now, Khaldun, I'll give you the floor to comment and please try to tie in what Scott was saying about the collaboration and how interaction could be increased in the last mile. But also I know that KCC has done a lot of the digitization type of efforts to improve the way services are provided. So please comment that as well. Thank you.
Thanks, Henry. I think Scott pinpointed a very important note about how the crisis last year accelerated collaboration and accelerated digitalization. I think it was a blessing in disguise. I've said it in different sessions before. You know, the regulatory framework and the decision making has been accelerated during that crisis to accommodate these changes and to make the processes more efficient. And the fact that this was a case that actually created better results during the worst crisis that we've had in our times, basically, raises the questions that we are capable of even further collaboration, utilizing technologies. Scott and Andreas mentioned technology. I think investment in technology and riding that early on is going to make the processes more efficient and make the collaboration more fruitful. We've done that in the past, and I think we've maintained that with all the custodians in the market, and the collaboration level has accelerated. I think even the regulative bodies have seen the improvements. What we've done, for example, during the crisis, is we've introduced electronic AGMs and electronic voting for investors in the Kuwaiti market. This was developed actually during a 3 months period when the pandemic, because investors were not able to attend physical AGMs, and we were required to do this. The project was an idea that started about 2 years ago, but then it was pushed in a speed where decisions were made by the ministries and regulative bodies to ensure that the CSDs offers this within the legal framework of the country. So I believe that this is a case study that should be taken seriously, and we should build on that. And Scott probably is a bit passive, saying that CSDs might go back. I think that we are going to move forward and use what happened last year and build on it. At least in Kuwait, we've already started investing into this technology, and you'll see these results hopefully by next year. And I believe this is something that's given. I mean, a winning strategy for any CSD or any market is riding technology early on, not waiting until the others and follow them. Just invest early on, and it's coming.
Thank you, Haldun. We have not too much time left, and then there's one topic to discuss a bit, and then, as I said earlier, I'll give you a floor of a minute to walk through your crystal ball and then what happens next in the CSD industries. But Anna, I would like you to give us your views about the cross-border collaboration, the links, and briefly, Scott could explain that from a custodial side, whether links are beneficial, should there be direct links or through a correspondent bank, what links, business cases are, if any. I mean, we are talking about a part of the world where the investors do trade across the countries, but that's rather limited. Is there really a business case to do that? So, and
thank you, Henry. If we're speaking about the links, I would say that indeed having an omnibus account linking it with the previous topic is a must for this situation. So while indeed for the domestic situation, for the domestic markets, having the segregated accounts, having a direct holding model indeed with a full view can be appropriate, and perhaps indeed in some cases, as explained, even better suited. For the links environment, having the omnibus account is a must, because indeed otherwise, for the link in CSDs, having the cross-referenced accounts at the other side of the CSD, so for the second CSD, would be simply way too complicated if there are particularly too many links. So this is certainly the point that I would highlight. Otherwise, we shall certainly be seeing the intensification of the links. And I would certainly invite the domestic CSDs to make sure that they are doing all they can indeed in order to help other CSDs or the custodian banks from the global community connecting to their market in order to inject, obviously, the international investor community. So Scott has mentioned that if the market is attractive, the investors will find their way, and this is certainly correct. But indeed, we have also seen very beautiful cases where the link from one CSD to another CSD was really injecting a massive inflow of investors. And from that perspective, I certainly believe that this is really something to look at, particularly for the emerging markets, indeed, where indeed the interests of the investment community, particularly now, can be very important. Yeah. So would certainly invite to look at the inbound links to your market in particular. But if you would like to develop the investor CSD activity as well, which certainly is related to a broader and more sophisticated service offering, in order to scale it, certainly there could also be an attention point there, but indeed it requires other capabilities, other expertise, and here indeed, if you're not ready at your regional level, then the collaboration and partnership indeed with the custodian banks or other CSDs can be very beneficial as well.
Thanks, Anna. Personally, I'm not so sure that links, at least direct links between the CSDs, all make sense, and it's a cost issue. That's why I'm trying to say, obviously it will increase the access to the market and it has many beneficial points, but creating the links with the low volume of transactions going through from one market to another may not sort of at least see profitability.
Sure, we should first look at the business case beyond anything, absolutely. Now, indeed, if you are speaking about the situations of links where there is a lesser business case, certainly the partnerships are very well suited indeed to address these cases.
Sure. I'll give just 1 minute comment to Scott before we start to finish up.
Sure. Thanks, Henry. Look, I think there are three potential areas where there's growing pressure and we need to find collaborative solutions. One was, we've mentioned two of them already, corporate actions. There's much tighter cutoff times expected from investment managers today, and they want to be able to trade to the right at the last minute. And the infrastructure generally within custodian banks and CSDs is less flexible than it could be. I think there's work to be done there. And proxy voting, I think Andreas touched on that, and also Anna. It's a really important element because ESG and responsibility for exercising the vote is becoming a really big thing, and we have to make sure that we get that right. And I think there's a lot of work, and I think actually the Middle Eastern exchanges have done some great work around that. You know, they've recognized that early and they've come up with workable solutions. There's also things I think that could work around collateral management, but let's not touch on that today. Now, my closing comment, I guess, Henry, would be, now, Standard Chartered may not be atypical, but we are certainly beginning to see, in the last 5 years particularly, a significant increase in cross-border activity within the Middle East by Middle East investors, let alone by international investors. So I think the pressure on CSDs to collaborate more closely so that you can simultaneously divest from one market, participate in another, which is problematic today from a funding perspective, is something that is going to demand our attentions going forward. It's not made easier. In Europe, it was made slightly easier by having a common currency. We're still a way away from that. But I think these actual operational matters are going to come very much to the fore, and really look forward to finding really workable solutions. There's plenty of willing participants there.
Thank you, Scott. Now, I give 1 minute each to say your own views of where is this industry in this part of the world in 2025. And please look at the industry. Are there any new services that you expect to deliver? New asset classes, funds, crypto assets, or similar? And please also highlight what has the pandemic teached us in terms of how we work, where do we put our focus in the business side. So I will give the first floor to Andreas.
Thank you. The crystal ball is always difficult to look into, but I'll keep it short and sweet. I think we will see a technology revolution in the CSD industry. Maybe not the next 2-3 years, but in the 5 to 10 years time, we will see a technology revolution, and we will see a number of new asset classes, not only in the region, specifically in the region, but also I think worldwide, generally.
Thank you. Anna, just to top up what I said, do you foresee CSD consolidation in the region on top of the other things that you would like to comment?
Thank you, Henry. And I would certainly join Andreas indeed in saying that the technology revolution or evolution indeed rather is unavoidable. From that perspective, indeed, and we have not sufficiently perhaps given a deeper dive on whether it's a threat or an opportunity. I personally would rather see it as a big opportunity indeed for any CSD. We should certainly be very much in the sync with the markets and with the developing needs indeed of the market participants and the new generations indeed that are all expecting to operate in the new digital environment. I would certainly also see that we will need to be not necessarily very white or black indeed in terms of choosing the technology, centralized, decentralized. There will, and Scott has mentioned it, certainly the right solutions in terms of having this centralized authority that would be operating based on the DLT. That could be indeed the right approach here. Many, though, still see the different architecture, right, in financial markets, where we may see the emergence of two different parallel worlds in a way. So one that would be really focused on the legacy traditional systems, and here we would see the separation of different functions. But some people do say that there should also be the possibility to combine the different functions in one legal entity. Here, well, certainly we may be seeing the benefits. I would also alert particularly regulators that may be looking at this about the possible risks with regard to the fragmentation, certainly that it would cause, but also more importantly at the governance here and the fact that in any case, the functions should be there. The CSD function is certainly one of the most critical and systemically important functions, and therefore there should be really due attention to this function in the future from the regulatory perspective.
Thank you. Sorry, I need to interrupt because I want to give the last powerful words floor to Haldun, the CSD of today's panel, please.
So the last words always go to me. Well, I think the panelists have mentioned some great ideas, and I think technology sits at the core of all the discussions that we've had. CSDs normally see new technologies like distributed ledger as a threat to how the central role of it happens. I believe that CSDs should see it as an opportunity, and we at KCC do see it as an opportunity. And within our new strategy, there is a large portion of investment into that technology. We've already done a trial on cross-border settlements with Moroclear about 2 years ago using blockchain, and it was a very successful test. That actually gave us an indication about how capable our technologies are, and I believe that we will be riding that wave. And I believe that, like you said, and to top up this session, a winning strategy for a CSD, you need to get into the game early on, basically, on the technology. Don't wait and hesitate into investing in technology. Don't see it as a threat. That investment will come to fruition at some point in the future. So that's exactly, this sums up, I believe, the session and the purpose of a winning strategy for a CSD.
Shukran, Haldun. Well done. And well done, panelists. That was a great job. Thank you very much for joining. So and let's hope that the audience got some new innovations and topics to discuss in the future. Thank you.
Thank you, Henry, and all.
Thank you.
Thank
Thank
you,
you. Bye-bye.
Bye.
Bye-bye.
Bye.